Hi everybody, I'm Christian, CEO of Change. This is the fourth episode of Change Speaker Series. I have a very special guest today, Asse Sauga. Hi, welcome to the show.
Hello, it's a pleasure to be here. Thanks for inviting.
So Asse is a very special person to Change as well. He's a long-serving supervisory board member and also a renowned crypto expert in Estonia. I would say actually number one crypto expert, at least the people are saying here in Estonia. So I would let you introduce yourself first, and then we can go to today's topic, what is DeFi and the stable coins.
Yes, thank you. So yeah, my background is mostly in IT, in development and services, and since 2013 I'm more actively involved in blockchain and cryptocurrency space, and I'm co-founder of Estonian Cryptocurrency Association, which goal is to educate and impact environment so that the people are more aware about the cryptocurrencies and to bring together the public sector and private sector in that space. I have written first Estonian book about introduction into the Bitcoin and cryptocurrencies. And currently I'm consulting and I have some my own projects and yeah, I'm really pleasure to be a board member of Change Invest too.
Thank you very much. So what was like, before going to today's topic of DeFi, what was your wow moment with cryptocurrencies? Like everybody has this wow moment. When was it for you and what was it?
Yeah, that's really great question. For me, the wow moment was like before I discovered Bitcoin, I was working in Ministry of Finance and I knew how the money is created, how money works, and I was aware about the negative sides of it and as well positive sides, and I knew how the feed works, like the Federal Reserve, and I saw that it's not gonna be sustainable in a long term. And then when I discovered Bitcoin, then at first it was just felt like interesting experiment. But the months went on, and I studied it more, the white paper, and looked through the forums, and that in that time there wasn't much information available. So I was studying by myself and looking for information, and the more I understood, the more I realized that wow, this gonna revolutionize the whole financial industry, and like it's so big that we don't even know how far it goes, and yeah, it got my passion the more I got into it.
And I presume 2020 kind of like even made this view a bit, let's say, more stronger about money printing and how, let's say, Bitcoin can be a solution to this, I presume.
Exactly, yeah, totally.
Sounds good. So what year was it when you basically purchased your first cryptocurrency?
It was end of 2013, just before the MTGOX crashed. I took a small loan. I got really involved with FOMO. Okay. And I took a small loan and bought 3 Bitcoins, and then suddenly after I made the transaction, the MTGOX crashed and Bitcoin price dropped like from $1,200 to $300.
Okay, so that's a good way to get into crypto. Like a lot of retail investors in 2017 and now as well lately, that when crypto price is all-time high, but if you hold on, I think the learning from here is that it can be really successful investment. Mm-hmm. But going to today's topic, what is DeFi and stablecoins? I presume you also read the Change's white paper in 2017 when we were in the early days of DeFi, and I mean our white paper was all about decentralized financial services. How did you view our white paper back then? About the DeFi, because like we were thinking more that the DeFi service is not going to be protocols, but more like fintech, let's say companies, and furthermore, like how has it developed since 2017 to today, basically?
Yeah, when I read your white paper, then the promises were really, really great ones. I really liked it, and you got my attention immediately, and especially because of Estonian team behind you, and you were Singapore in that time. But for me, I didn't maybe realized the like DeFi potential itself in that time. So first, when I realized opportunities of the DeFi were when the Ether Delta came out. You know Ether Delta?
Yes, yeah. First, like let's say first like mainstream, let's say decentralized exchange with a really bad UI.
Exactly. Even the UI, the UI could be improved as well, but the most bigger difficulty or inconvenient part was that it's really slow. But yeah, my first experiences with DeFi were with Ether Delta, and I tried some trading even there. And for me, it's in that time I was working. I just quit the working in LHV Bank as a blockchain expert, and it was really surprising how it's possible to do the trading totally anonymously. Like it worked really well, the settlement, everything in a like a bigger scale. It was kind of the settlement times, and it was quicker than if you include all the KYC process and banking paperwork and everything. Then from start to finish, actually Ether Delta was quicker if you want to do just like account and trading and everything involved. But still, yeah, it had its own obstacles, and today we have way better solutions how to do trading in DeFi.
Exactly. By the way, a fun fact before going to the let's say how DeFi has developed. Ether Delta was the first ever exchange where Change's own token was on. Because you know, back in 2017, when like all of these like crypto crowdfunding events were going on, like the exchanges were like asking like really large amounts of money to be listed. So we always like were focusing on building a great product and not paying and going with this craze. And obviously then the first thing what community did out themselves was to list it on Ether Delta. So one day we didn't know anything about Ether Delta, and that next day our whole community was trading there. So that was how we basically got to this space. But what about the let's say like that was the start for you, but how has DeFi developed from that point, from this 2017 time to let's say 2021?
I think the first real DeFi product after Ether Delta was MakerDAO, a product which is probably the first stablecoin built in totally decentralized manner. Really shortly, how it works, the MakerDAO, you can put Ether as a reserve, and you will get out DAI token, which is pledged to USD. And how it's pledged to USD is that there is internal incentivized mechanism with the interest, which holds the rate enough closer to the USD, and it's algorithmically algorithmically managed. So the team worked on the protocol like over 2 years, and I think it was 2018 when the MakerDAO came out first. And I tried it out as well. I took a loan there, and it totally again surprised me how easily it worked. And now the next maybe milestone was this spring. I think Compound was the next one, which came out with liquidity pool protocol, and then the Uniswap came out, and then many other really amazing protocols.
Can you explain for our viewers like what is this liquidity pool? What does it mean, and liquidity mining?
So basically, what is the main difference in DeFi and CeFi is that when we look trading, then in CeFi is centralized finance, centralized finance or banking. Yeah, and so in a conventional exchange, we have trading based on order books. We have demand and supply, and order books are putting the orders together. But in DeFi space, when there is all based on transactions, but especially the blockchain solutions are not so fast with the transactions. So there the order book needs really high speed in terms of transactions. And that's why the Ether Delta was low, that it's based on order book. And Vitalik Buterin came out with the idea a couple of years ago that what if instead of order book, we will have simple formula and it creates like liquidity pool, which works a little bit differently than order books. And then some guys put this idea to the code and came out with Uniswap, and it's basically liquidity pool, which means that if you like to participate, then you have option to put the liquidity in. You can send the tokens into the smart contract protocol, and the tokens have to be in a pair. So for example, you will put one Ethereum and you will put one exact amount USDT, and then you can earn from that the liquidity pool based token, as an basically it pays you back the interest.
Exactly.
And all the other traders now have opportunity to trade there, because you will provide the liquidity to them, and these trades can be that they are working automatically. So the liquidity pool is kind of like automated market maker as well.
Exactly. So basically to summarize what you said, like from 2017 it started with, like, let's say, order book based decentralized exchange. Then the first really stable coin was basically like a decentralized stable coin maker was basically launched in 2018, and now many different like use cases for decentralized finance come out, like lending, decentralized lending, yield farming, also synthetic instruments based on different real world instruments. So for example, synthetics and so on. Actually, Change's mission is as well unleash a borderless financial system run by the people. So actually, this is our mission, and I mean, DeFi will play a major part in there. But let's, like, in an abstract level. So, like, why do we need, like, in addition to decentralized value exchange, what is Bitcoin? Why do we actually need decentralized financial services on top of blockchain? Like, why cannot we just have CeFi products, being paid in Bitcoin, for example?
Yeah, it's a conceptual difference. Like CeFi is all about centralized point, and the human factor is way bigger than there. And where there is a human factor, it needs a regulation externally. But in DeFi, in the case of decentralized products and services, the human factor is minimized. Which means that it doesn't need external regulation. The internal one is anyway there. Internal one, it's basically led by mathematicians, math.
Everybody can audit the code.
And pure logic, and in DeFi, it's way more. It can be way more trustable, because from so far we have a lot of experiences how weak human factor can be, and how the regulations actually doesn't work. The corruption and hackers, and there's so many cases. It can't be sustainable, in DeFi there is way more transparency, and cooperation is based on collaboration, not so much competition, and the trust is earned in a different way, in a way like a sustainable way, let's say.
Exactly. But what would you say is like the main use case for humanity? Like if like, let's say in the beginning when we started in 2017, we looked at DeFi more like creating this global competition for services. Because like it's right now, you know, like every country has their own little like small competition of banks or like fintechs, and basically, let's say there's like a bank in Indonesia, a bank in Estonia, a bank in US. They're not competing with each other. Therefore, the service for humanity is worse, basically. So we looked at it from this angle in the beginning. But now, like, you know, how DeFi has really evolved is actually this technical factor is really important as well. So it's not even like fintechs or companies providing services cross-border. It's more like it's algorithmic. Obviously, there's regulatory arbitrage as well, because regulation means cost for companies. So if you can provide, let's say, on this layer services, you can keep the cost down as well. Like, what is the main, let's say, value prop for the people? Because there are many advantages to DeFi, but what is the main thing in your view?
I see like maybe two perspectives there. One is that the currently like you described, we have many different banks, and the banks have their own closed systems and servers and data management, everything in place, and they don't know much about DeFi options. But in the future, I believe that the blockchain and distributed ledger technology will become as an underlying technology in every bank system, actually. And from that moment, the DeFi will be in a way underlying technology of CeFi. I see that it goes in that direction because it makes sense. You will get so much benefit from the decentralized underlying platforms, even if you build centralized products top of it. So this is one view how I see where it goes. But when we look more to the product specific side, then I see that to achieve the ultimate liquidity in the finance world, it can't be achieved in a current situation where we have so many different regulated countries, regulated banks, central banks, the banking infrastructure. It's not possible, because it's like competition based and it's closed. It's not trustable enough. The different parties haven't enough trust to each other. Regulations are there, and I see that in the future there will be different layers of ultimate liquidity protocols where any kind of asset you can put in and you can take out immediately when you need, and based on those protocols which are 24/7 available, no matter where and who you are, the different products again can based on those liquidity protocols, and this it's currently a really huge challenge to achieve the ultimate liquidity in a finance world. We have different stock markets and different capital markets, but ideally the ultimate liquidity protocol top of it, based on DeFi pure logic and mathematics, will solve that.
Yeah, talking about liquidity, actually, right now, if you take Aave, for example, you can get a loan on Bitcoin collateral. But what if you can tokenize peer-to-peer loans, real estate? You can, if all the assets would be tokenized, like how liquid and how many more, let's say, products you can build on DeFi. It's amazing to think.
Yeah, it's insane what you can build there. Yeah.
Exactly. What in your view are the main challenges in DeFi? Why is it not the case that like everybody's using DeFi services today, and let's say CeFi products are, let's say, would be gone.
Currently, the DeFi is actually in really early stage, and it's like huge experiment, top of the experiment called blockchain and Bitcoin.
Yeah, it's experiment on top of experiment.
Yeah, and the most of DeFi products and protocols are based on Ethereum blockchain, but Ethereum has its own challenges, which are transaction fees, the transaction time, and that's why the same challenges are mirrored to the different DeFi protocols and DeFi space too. But even more deeper challenge there is, in my opinion, that blockchain-based database is not anyhow really sustainable and good for the DeFi, because there are two reasons why. First is that in DeFi protocol there is crucial transaction sequence, but with the blockchain solution it's possible to interfere, because in a blockchain we have miners, or when it's proof of stake, then we have stakeholders there. And those are actually in a way, if you look internally, the blockchain, then they are kind of third party. They are third party between the sender and receiver, and third party which confirms the transaction. With that one comes two challenges. First challenge is that this third party have actually potential opportunity to influence the transaction and the sequence of the transaction. That when he has, for example, when the miner has a big stake in a DeFi protocol, DeFi liquidity pool, for example, and he sees somebody making a transaction which might influence the price in the liquidity pool, then he is the first one who gets the information. It's same like high frequency trading, that if you are closer to the server, you will receive first information. You
increase the gas fee and you basically...
Yeah, so it can overlap your transaction basically, or overwrite your transaction in a way. And another is that the transaction sequence depends on the fee what you put together with the transaction. This is another challenge, that again the third party potentially can influence put the higher fee into that. I'm a really big fan of the DAG chains, Obyte, and another is Hashgraph. The transactions in a DAG chain in Obyte works really simply. They just, every new transaction confirms the previous one, and the sequence in place there, like fixed. There is no blocks, there is no block confirmation time, there is no miners, there is no third party. You will send the transaction and it will get confirmed immediately. In that environment, DeFi makes much more sense, because there is no third-party risks there. And I see how big innovation is possible. Even the Obyte have created so-called multi-dimensional bonding curves, which is, again, the bonding curves actually not any like so new in a DeFi space, but the multi-dimensional ones are the new ones. So that creates another really huge opportunity to create financial products. So for example, multi-dimensional bonding curve, that means in shortly that you will put one token, you will put, for example, Ethereum as a reserve, and you will get out two different tokens which can be related for some external statistics. For example, you can create a stable coin which is related to your Twitter followers. Or you can create a stable coin really easily which is related to society behavior, like tickets, for example, like police tickets or speeding tickets. like if the society will receive more speeding tickets, then the stablecoin price goes down. So you can create incentivize for the investors in DeFi space that the more good behavior from society comes, the bigger will be the reward for the investors.
Mm-hmm. Sounds good. But because we need to start wrapping up as well, you mentioned White. What are like the 3 token tickers what you would recommend to look at for, let's say, up and coming DeFi investors?
I would say Uniswap is a great one to look into. That was the first one, and they are great. They are doing a lot of developments there, and coming out soon. I think 3rd or 4th version of the protocol. That's one of the risks in DeFi that there are huge, like there isn't human factor risk, but instead of that there is a huge technical risk, and the protocols might change, and you have to monitor them. And if you put big money in, then you have to know what's happening there actually, what are the updates, and so it's really an experiment. Then Compound and then definitely Obite.
Okay, sounds good. So it's not an investment advice, but just that you can look into the projects and kind of understand. But I guess we need to wrap up as well. Our time is finished. Thank you so much, Asse, for explaining, let's say, some easier and some more difficult questions. And thank you so much for also being an investor and supervisory board member, at Change. Definitely, we're going to the DeFi space very soon as well. So it has been a cool journey together, and hopefully we'll continue this in the years to come.
Mm-hmm. Thank you for inviting me, and yeah, thanks.